Thanks for clicking. Canada's real estate market isn't expected to recover anytime soon. This according to the most recent release from Canada's Real Estate Association, as the market showed the slowest sales numbers since 2009, with even famed CREA economist Sean Cathcart saying the 2025 market had gone from a slam dunk to treading water at best. And the CREA, as always, has released an interview with its now despondent economist, who continues to be, uncharacteristically, pessimistic on the market.
Those things have certainly changed, eh, Sean?
Just a bit.
You're not gonna cry this time.
And we do have a real treat coming amid this release, as not only has the CREA provided us with its famed economist, but Bloomberg also sought to check the pulse on the real estate market with none other than the market Nostradamus himself, Royal LePage CEO Phil Soper. And Soper, I think unbeknownst to Phil Soper, as we'll see, actually did us a great big service, undermining his own argument that tariffs are the primary cause of Canada's slowing sales numbers. So what I want to do today is very briefly go over Canada's real estate data for the month of March, take a look at Cathcart's interview, and watch Phil Soper give us a realistic picture of Canada's real estate market. As we'll see today, even the traditional optimists aren't that optimistic on the 2025 market. We will continue to track how that market plays out on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into this data. On to the data. First up, the benchmark price. The benchmark price, if you remember, that's the price of a home that represents the most popular set of features, and that price was down about 1% in March, now sitting just over $700,000. That's down about $18,000 since last month, and down about $15,000 since this point in time last year. Sales are also way down, with quarterly sales numbers for 25 actually coming in lower than 2020. Back when we were in the early stages of a global pandemic. And Cathcart summarized the state of the sales numbers quite well.
Sales were down again in March. 4.8% month over month nationally. That's a big decline. It's basically 5%. And you add that on to the declines in the previous 3 months, and we're actually down now 20% from where we were just in November.
So yeah, prices are down, sales are way down, and according to the CREA's own economist, that's not likely to change anytime soon.
Buyers that are either going to the sidelines or staying on the sidelines amidst all this tariff uncertainty. And now, going forward from today, basically, the actual economic fallout that is not just the uncertainty, but the actual economic damage that's going to inform what happens next.
And yeah, with all of these changes, all of this uncertainty, the CREA has now downgraded its forecast, now predicting the average price to come in at about $688K on an annual basis, with it now sitting at $678,000. So according to the CREA, we should see some minor changes to the average price, not a whole lot, though that forecast has been downgraded by about $30,000 since its January predictions. And here to tell us more about the 2025 market, Bloomberg has turned once again to Royal LePage CEO Phil Soper.
I have declared Philip my High Counselor.
Is he qualified?
No, but in all seriousness, Phil Soper was actually fairly pessimistic on the 2025 market, even giving some very sage advice to potential home buyers.
Take your time, put those conditions on financing in your offer if you feel you need them, get a home inspection, and don't feel rushed.
How dare you!
Yeah, he's going to have some explaining to do. Regardless though, despite the advice, Phil Soper is still very much Phil Soper.
Came into 2025 expecting our forecast built in 2024 showed it to be the strongest year since that pandemic boom. All the fundamentals, people's savings, dropping borrowing costs, low default rate on mortgages, and pent-up demand.
Which is true, though in fairness, you said the same thing in 2023. Regardless though, please go on.
Everything was pointed to a very boisterous year, and it is unfolding, maybe on a muted basis, in the prairies, Atlantic Canada, Quebec, but in southern Ontario and the lower mainland of BC, Greater Vancouver, things are stunted.
Right, so the markets are still doing fairly well in the prairies, in Quebec, and in the Atlantic provinces, which checks out. Sales are up 13% from their 10-year average in Saskatchewan, Manitoba sales are up, Halifax prices are up, and sales are up in PEI as well. in obvious sharp contrast to what we're seeing in BC and Ontario. And to find out exactly what Phil Soper is maybe accidentally telling us, we're going to use Mill's method of experimental reasoning. Specifically, we're going to use Mill's method of difference, which states that if a case in which a phenomenon occurs and one in which it does not differ by only one other feature, that feature is the cause or a necessary part of the cause of the phenomenon or its effect. Meaning, if we take two cases, on the one hand, slowing markets in BC and Ontario, and on the other hand, accelerating markets elsewhere, and we look for the key difference between those two cases, then that difference is probably the cause of the differential outcome. So let's take a look. First up, interest rates. It can't be interest rates, though they are volatile, they are the same for every single case, both across BC and Ontario, and obviously in the prairies, in Quebec, and in the Atlantic provinces. Next, tariffs. Obviously, BC and Ontario have tariff problems, but so too does Saskatchewan, as does Manitoba, as does Quebec, as does PEI, Halifax, etc. So, same interest rates, same geopolitical concerns, yet we're still getting differential outcomes. But how about initial starting positions? How inflated, or not, were the real estate markets in Ontario and BC compared to those in Saskatchewan, Quebec, Halifax, and PEI? Well, let's go back to the pandemic boom, where we really don't see accelerating prices in Manitoba, Saskatchewan, Quebec, PEI, etc. You get the idea. But we do see it in BC and in Ontario. Those provinces now seeing their housing markets deteriorate. Okay, so now we've identified Mill's feature as the potential cause, initial conditions. The Ontario and BC markets had already taken off and maybe don't have the leftover residual income, the spare income, to support further price increases. So let's see if we can back that argument up with some more evidence. Let's take a look at RBC's 2023 share of households with sufficient income to buy a home, and we have the Atlantic provinces, the prairies, and Quebec, all three of which whose housing market are all doing okay as of right now. Let's tack on some more evidence for good measure. We'll take a look at the National Bank's Housing Affordability Monitor, and on its list of cities with the lowest mortgage payments relative to income, the last and third last cities are Quebec and Winnipeg, with the rest all being in Ontario and BC, meaning in all of those Ontario and BC cities, a greater portion of income is needed to buy that average home. So, is it possible that Ontario and BC aren't responding as well to the tariffs, aren't responding as well with their housing market due to the initial conditions? Well, crack an egg into a cold pan and then crack an egg into a pan that's already heated and see what happens. Yeah, and Paul Pearson would call this path dependence, where initial conditions both affect and limit the range of potential outcomes. With prices going sky high in BC and Ontario during the pandemic boom, it's almost ludicrous to think they would act in the same manner now as they did pre-pandemic boom, as they did back when interest rates were zero.
And we saw by the end of 2020 a lift in the market, despite the fact that there were clouds and uncertainty. I think there's an adjustment period that's going to happen here, and we'll...
Well, yeah, but Soper did back me up on the need for finance conditions, and he's going to have to answer to that when he sees the horde at the next gala, so I think we can cut him some slack this time. So, yeah, it might not be the tariffs that are causing these differential outcomes across all of these provinces, as every single province has to deal with tariffs. It could very well be the differential initial starting conditions, in that Ontario and BC already had their housing boom, already used up the available income, the disposable income to go into housing, and buyers may not have the income left to support another boom, whereas the other provinces who didn't undergo that same boom during 21 and 2022, they may still have a lot of income left. Don't just blame the tariffs for what's going on in Ontario and BC's housing market. It's much more complex than a simple one-to-one causal relationship. So, all in all, very unsurprisingly, we are seeing Canada's real estate market continue to slow down, and it doesn't look like there's any end in sight. Both Phil Soper and Sean Cathcart, traditional optimists, are being very pessimistic on the market, with even Phil Soper offering us some very, very sage advice that home buyers should heed anywhere and everywhere. That was not on my 2025 list. With all that said, we will continue to track how all of this does play out on this channel. Make sure you click like and subscribe if you want to get those updates. But for now, thanks so much for watching.